Hey, I was going to say, hey, look who's here, but actually, I'm at his place for a change. Bruce Porter, Dollars and Cents. Good to see you.
Good to see you, Tom.
I like your digs. I have to say that.
Welcome to our house.
Thank you very much. Okay, we've got another question for you.
Yep.
So here's a question. I'm going to read it off to you. I just recently purchased a new home. I keep receiving bi-weekly mortgage payment information in the mail, encouraging me to enroll in the program to accelerate the payoff on my mortgage. Is that a good plan or not? And anybody who refinances or buys a new home is going to get a bunch of these.
That's right. You're going to get several things in the mail, from mortgage life insurance to bi-weekly mortgage payments. All these different things, they're going to all hit you right in the mail right after you get that done.
Right.
Now, bi-weekly mortgage plans, what are they and how do they work? Well, basically, a bi-weekly mortgage payment plan is a 13 payment per year plan spread out over that year.
Okay.
As opposed to a regular mortgage, 12 payments, 12 installments per year for the life of the loan.
Right.
So in the example that we're going to look at today, we're going to look at a $100,000 mortgage at a 4% interest rate over a 30-year period of time. Mm-hmm. So now when we look at that, the payment is $477 a month. So the interest paid for the whole life of the term, the 30-year period, is a little over $71,000.
Okay.
And the average interest payment made per month is just under $200 a month. So every month we're making that payment. We pay $71,869 worth of interest over that 30-year period. So how can we save some money?
Yeah, please, because that's a pretty good chunk of money.
That's a chunk of money.
That's 3/4 of what I bought the house for.
So now a bi-weekly plan. That's gonna cut that down to $238.71 bi-weekly.
Okay.
The total interest paid for the life of the mortgage, $61,000. The average interest per period per bi-weekly payment, $76, almost $77.
Okay.
We're going to pay that mortgage off in 25 years. So we're going to save 5 years, which effectively saves us $10,700 worth of interest. So that sounds like a pretty good deal.
Yeah, it does. On face value, it's like, yeah, I can save $10,000 and 5 years. There's always a cost to doing business, though. I mean,
well,
is there a downside here?
There is, like everything.
All right.
The math makes sense.
Sure.
Now, what if you could do it a little bit different way and accomplish the same thing? The problem with those bi-weekly mortgage plans, you're locked into that. Once you enroll in that plan, you've got to make those bi-weekly payments. And effectively, you're making those payments bi-weekly for that year.
Yeah.
Effectively, you're making a 13 payment per year type plan.
Right.
That's what it is. The bank only credits that as receipt, and it's not going to credit it till the end of the year, that extra amount. So now if you do what I call a self-directed bi-weekly mortgage plan, all right, instead of making bi-weekly payments, you can make your regular payment, just add $40 a month to it, and you're going to effectively do the same thing for the year. You take that one extra payment, that $477,
right,
divide that by 12, and that's $39. So add $40 a month to your payment every month, and you're effectively doing the same thing, and it's going to credit every month instead of till the end of the year.
I was going to say, your credit starts when you... Now, do you have to do that thing where you delineate it for principal only, that sort of thing?
I would make that towards principal, and that way you're going to reduce it quicker. And you're going to have the flexibility, if times got tough, you could back up and make your regular payment.
Yeah.
If you lost your job or you got sick. So if you're in the bi-weekly mortgage plan, you can't back out of it. You're stuck with it. So there's a lot of flexibility in doing it yourself, but you got to have the self-discipline. Now, when you do that, you could turn around and refinance, maybe now, maybe later, for a little bit better interest rate, maybe a better term, and continue that same habit of adding that $40 or $50 a month to your new payment, which hopefully is less interest because it's a better interest rate. And now, instead of saving 5 years, a self-directed plan, you potentially are going to save 6 years. And so you've saved one more year and you've got the flexibility to do it on your own. Either way,
Right.
you can call a professional. We'll be glad to help. But that's the pros and the cons to the biweekly mortgage
A
plan
little
that I
bit
see.
of self-discipline. You can save yourself a little money. You can hedge your bets if times get tough. You can pull back just a little bit. And then you talk about even refinancing that can save you a little bit more money.
That's right.
Sounds like a pretty good way to go, but you have to have the discipline, a good financial advisor.
You got to have the discipline. You don't want to dip into the rainy day or the saving to spend or the retirement money. So that's a way
Stay
to do
away
it.
from those.
That's a way to do it.
Bruce,
Good
always
to see
good to
you.
talk to you. Great
bet.
advice from Bruce Porter.